We often feature a year-end review on this program of important tax developments.
Yeah, that's true, Mike. But in a similar vein, we often give short shrift to trends in the area of accounting and auditing. As viewers of this program have come to expect, we have provided ongoing coverage of several important developments that have taken place so far this year. But as we begin the push to year-end, it is a convenient time for us and for you to look ahead as well. And as usual, there are several long-term trends that will continue to have an impact on accountants and auditors. Although we will refer to particular standards and releases in this overview, we are going to use this opportunity to examine the potential impact on private companies and their accounting advisors from 1, the growing use of differential reporting, popularly known as Big Gap and Little Gap, 2, the convergence of U.S. GAAP with international accounting standards, and 3, the replacement of historical cost with fair value accounting.
With us is John M. Fleming, Director of Accounting and Auditing for Lascalzo Associates. Thank you for joining us this month, John.
Mike, it's my pleasure to be here. Thanks for having me.
Whenever there's press coverage of the topic of financial reporting in general, and of accounting standards in particular, it typically focuses on the FASB and its role in setting GAAP. But what about those CPAs whose clients are private companies, John? To what extent do they need to pay attention to FASB's agenda and releases?
For a long time, Mike, FASB was the only game in town, so to speak. What we had was virtually every company in the country reporting on generally accepted accounting principles. At some point along the way, many companies started to realize that the complexity of the GAAP framework was such that they couldn't do it in a meaningful way. They didn't have enough resources to develop meaningful GAAP outcomes, and they began experimenting with other bases of accounting, principally income tax bases. And what we've seen is a significant growth over the last few years of companies using income tax bases. FASB as a group, though, has been influenced really heavily lately by the SEC. And what we see is the SEC having its own agenda, particularly as it relates to international accounting standards. And as a result of that, more and more companies are having difficulty complying with many of the more recent GAAP standards, particularly FIN 46, FIN 48, FASB 150, those that have a great deal of complexity to them, maybe incorporate some bit of fair value. It's just causing a lot of private companies to have difficulty in trying to comply with FASB. Having said that, though, it's still important to understand the FASB concepts. It's important to understand what FASB is trying to accomplish. Right now, the primary goal is to bring closer U.S. accounting standards to international accounting standards. And we suspect that in the next 4, 5, 6 years, we're going to see significantly more focus on international accounting standards for both public and private companies.